Well, good afternoon, Maverick Traders. It's Joe with you here. It's the 12th of September, a Tuesday. Let's jump into the market action. I've got my 2 cents. I'm going to give you my opinion. It's what it is. Take responsibility for the outcome. Make sure you go through your own risk parameters and trading plan to take that responsibility. First off, I'm going to go through the overall market, see if there's any sort of news events that might have changed the outlook or the sentiment in the markets. Technical analysis, as always, a top-down approach in the overall markets, and always go through and find some trades for you. See if I go across the community, see if we get some bulls, bears, or sideways trades to share with the community. So let's jump into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, kind of a wash from the previous day, as kind of the markets have been waiting to, I believe, for this CPI. Let's jump into the daily news first. So Monday and Tuesday's action kind of washed. We had a move to the upside, and then today's move to the downside pretty much took that away. So we're sideways, basically. If you were to take away Monday and Tuesday, no real change from where we finished last week. Now, that's usually very common when it comes to the markets waiting for a big event. In this case, I do think it's the CPI announcement. Although I don't think it's going to have the impact that it has in the past. The expectations are for this to be in line. Even small increase in inflation, which is expected, a small rise, would keep us on pace for what the Fed predicts as inflation under control. So what does that mean to the markets? We are not sure if this is an oversold bounce or just a pullback for what could be the next move to previous highs set earlier in the year, right? Or I should say a few months ago. Your guess is as good as mine. Let's move over to how we finished. The Dow, the S&P, and the Qs pretty much opposite of what they did yesterday. Those same percentages would have been plus. Now they're minus. Not exactly, but just that push-pull. The Russell actually didn't do much. It stayed in line. However, we did get a move back up in oil. We've seen oil and utilities energy strong over the last little bit, and oil had a pretty good move to the upside. Now, yesterday it was down about that amount as well, so I really can't gauge anything off of today's action except for let's get back to neutral and see what happens tomorrow. Advanced decline line, 50-50, well, 54.41, and the above below 50-day moving average still falling to the south side. And it would be expected to, as we've seen these markets in a little bit of a corrective action over the last, couple of weeks. Even though we did have a pretty good move off the bottom there about a month ago, it didn't really get back up to previous highs. So we're still kind of glass half empty, if you will, in that situation. Let's get into the symmetrical triangle pattern. This was I thought was pretty interesting when it comes to the charts because these do sneak up on me. I am so focused on this resistance area here and how far we go down there and this crossover that you get this big engulfing candle. This is where I really believe these markets are going to roll over. I was very, very confident in my bearish outlook. Never did get the confirmation. Then we did get a move a little higher. Okay, well, that's a pretty good pull to the upside, but it's not quite back up to this level, right? This could be construed as a lower high. And then we get a rollover, which could just be a little bit of a breath before we shoot higher. Now let me erase that because I want to get rid of that line and start over. But what we do run into, and this is pretty common when it comes to the announcement that we're about to have tomorrow, is we've got a range here that was established, but we also have descending high and an ascending low. This is referred to as a symmetrical triangle pattern. Now, symmetrical triangle patterns usually break in the direction of the longer term trend. And folks, I only took a snapshot here back here in May. You could actually go deeper if you'd like to. So the expectations would be to break to the upside. There is a little bit of a caveat here, and I'll explain that. The reason why I'm not too sure about this one is because we have a beautiful bearish crossover of the 50 and the 20-day moving average that is still in play. So if this was to roll over and actually drop to the downside, I would not be surprised. This would also correlate with a head and shoulders pattern. We do have a neckline right here that could break. So, geez, I think I just talked to myself cross-eyed. You draw enough lines, you can conclude whatever you want. What I'm waiting for are levels to break before I do any sort of action. And let me get that a little bit more specific. It's going to have to be this support line that was set on Friday, Thursday to Friday of last week. And it's going to have to come pretty quick with some decent volume, somewhere up in this area. That'll be easy to do with a catalyst such as the CPI if the number's bad. On the flip side, I need to see this break above the upside. I don't necessarily need to see the bottom. I just need to see sellers get out of the way and allow buyers to buy the markets. So you do have a pretty good range here. Here's your entry to the upside right here, and then here's your entry to the downside right there. That's all I'm waiting for. Tomorrow will tell, or at least start this in the direction I'm hoping, and we can go from there. Now that I got my 2 cents out there, guys, let's move on to the next chart. This is the Qs. It's going to be the exact same thing. You can see this descending area on the highs, and an ascending, a pretty aggressive ascending on the lows. This one's a little bit more optimistic as price action is above both the 50 and the 20. However, they do have that crossover, and you still have this lower high. So I have to be a little cautious, even though I know that this has been outperforming for quite some time. How do we finish on the heat map? We're not getting much out of this. It's just basically green. It's kind of funny, folks. We do these day to day, so feel free to jump back because this was absolutely completely red yesterday. And guess what color it is today? Tesla was a huge leader yesterday. Who else? Oh, Qualcomm's still up there a little bit, but you can pull up any of these, and they're all just the exact opposite color of what they were yesterday. So when I get flip-flopping markets and different signals like that, it's pretty easy for me to go neutral. I've got above the 20-day moving average when it comes to price action. This is the SPY, by the way, but it's at the 50 when it comes to this. We're close today. Then the 20 and the 50, not only are they flip-flop, but the slopes are pretty much flat. So I give that a red inkling. What am I going to do? Nothing. Nothing. I'm just going to sit back and I'm going to see if I can get 1 or 2 days to actually get through one of these levels before I flip a switch. Now, folks, I've been working a lot with a lot of you recently, and I've got some bullish exposure and I've got some bearish exposure in some of our traders, and they're actually both doing pretty good. Just make sure you just stick to that. Don't make any sort of drastic changes until we see a break above or below those levels. Let's move on to some potential trades here, as I'm seeing just bull and bear. A lot of sideways is floating a little higher, floating a little lower. Just depends on where it was at, what sector it's in. I don't look too deep into that situation right now with a market that's consolidating. But I will look for outperformers and underperformers. Take a look at what's going on here on the bull side. Amazon, GE, big companies, large staples, XOM, RRC. We've got some energy in there. Micron, huge tech conglomerate. But one I did like was OIHI. This is a REIT. It's a healthcare REIT, right? So we'll take a look at that. Something different, something that we haven't looked at in a little while. On the bear side, QSR, First Solar, American Airlines, Kohl's, I thought was great. A lot of retail weakness as of late. A lot of retail stores missing numbers, chalking it up to theft. And we do have a slower consumer. Retail sales were slower over the last quarter. Let's see if that continues. And so that's the one I chose. So let's just jump into a couple charts that I do have. This is OHI. It's a REIT, but I just like it because it's something outside of what we've been following. It's either tech or energy, Let's get out of it. Let's go into a little bit more like a real estate holding. It did show some pretty good signs here. I do like this participation. I know this doesn't look too high, folks, but if you were to draw a line, which I can't do very straight, anyways, it's a little bit higher than average, at least in the last couple of months. So I'll be patient with this. This would be a slow play as a diagonal spread or maybe to target a butterfly. I would give this a little bit more time, maybe 3 weeks, 4 weeks, if you believe the markets are going to steady themselves here and move higher. So you do have to have a glass half full outlook, and if the markets do break higher, this would be one that I'm looking to maybe put to work. Now on the flip side, the bear side, straight down to it is Kohl's. I just like the sector. I just like a slowing consumer. Some of the numbers that we've seen, so we'll see. It's just this really cool level. I can actually go all the way back to April, where this has just been sliding ever since. The bear candles well, I guess that bull candle's pretty big. I was going to say the bear candles are larger than most of the bear candles or bull candles, but it does look like it's slipping here. This might not really fall hard towards that, what do you want to call this, 22 or 2175 area, but it could probably slowly get there. I imagine this is going to be its next stop. Something to be bearish on if that's what you're looking for in that sector. All right, folks, so I got a symmetrical triangle consolidation and a CPI that could be the catalyst to the next move. What I'm excited about, folks, is I get to do this tomorrow. So let's see what happens and if anything changes. So CPI is the only thing that I really saw that's economic-wise that's going to be exciting for this week. Retail sales, the PPI, industrial production. Sure, we don't really get a jobs number until next week. We didn't have any sort of economic announcements on Monday or Tuesday. So the markets are kind of, they might be gearing up a little bit too aggressively for this announcement. More importantly, what the Fed says moving forward, I think might have some impact. So if we get an initial reaction, just sit back for a little bit because we might get a secondary reaction when we get those Fed minutes afterwards. As always, folks, earnings, check your potential trades before you trade anything. All right, guys, thank you so much for joining me, and we'll talk to you next time. Bye, folks.